Welcome to the Carr and Seguin Show, hosted by Devin Carr and Paul Seguin, where two Michiganders dive into real estate, outdoors, community building, and everything in between. What up?
What's happening?
Back again. What episode is this? This is episode 36? 36.
All right.
Look at that.
So we're going back in time.
Are we?
Yep. We got Tim Hooker.
Oh, we are.
Yep.
Yes.
Tim Hooker joined us. He was one of our, if not, he was the first.
He was our first guest.
Our first guest.
Yes. Yeah. You were the. It's funny. Devin said it. He was like, he's the guinea pig for everything. He was our first guest on back in the very beginning of the show.
Yep.
And he's actually now our very first call-in guest. So we brought him back on. We wanted to do an update on just where we were.
Yeah, with everything changing kind of in the market, and obviously the news likes to scare everyone a little bit. So we thought we'd have you back on to kind of talk about some hot topics that are going on, and maybe the change in market with the new year fast approaching, because what Paul said on another show, that how far is Christmas?
Less than 2 months.
Yeah,
There's only 7 Fridays left.
Yeah, so New Year is coming fast.
The spending season, at least for us it is. It's like,
well, if there's goods.
well, between birthdays and holidays and family gatherings, and, it's like constantly you're spending money left and right.
That is true.
The multiple grocery trips, because Jess has got to make all those extra little desserts and got to bring a dish. It's like, Jesus Louise, again? We didn't budget that extra $200 a month of desserts.
I'm sure you don't like them.
Desserts?
Yeah.
Oh, yeah. How do you think I get my belly going here? It's being a dad life. We can't look as good as Hooker does here. I mean, just skinny of bones and looking good.
Hey, I appreciate that, Paul and Devin. I'm really excited for you to be on this 30th podcast, and like I said before, didn't think you guys would last this long. So.
The truth comes.
I'm really
proud.
I'm really proud of you guys, and it means a lot to bring me back on. And I guess I didn't mess up too bad the first time. So, today we'll get into that market update, and feel free to hit me with all the questions, and we'll juice this grapefruit.
Love it. So how you been though since the last time we saw you? Been you have a good summer? Anything go on some fun trips or anything?
Yeah, I'm a avid traveler. So right now I'm in Oklahoma City, actually the first time here, and I've been to Wyoming, California, a couple other states. So
oh wow,
I've got my dose of traveling in, and that's a big part of my life that I like to enjoy and get outdoors a lot. Like you said, this is an outdoor podcast, and part of business is you got to decompress somehow, and getting outdoors and in nature is a big part of that for me.
Heck yeah.
Shoot.
So it brings you to Oklahoma City.
Yeah.
Well, there's a Lifetime Fitness here, and I got a Diamond membership, so I'll just bounce around to any city that's got a Lifetime and set up shop and work and get a little workout into.
That likes fitness. Oh man,
You're
that's why he looks so good. He plans his vacation.
I don't have a gym membership. That might be the problem.
Yeah.
My gym membership.
It's an investment.
Treadmill
and
2 pairs of dumbbells in my basement.
Yeah.
It
Whatever works.
So you really schedule your travels around Lifetime Fitnesses? Really?
That's damn right, Paul.
I love it. Yeah, that's great.
Well, I mean, people go.
I
on
usually
those
do it around
big runs.
food. Again, that's why I'm, chunky as I am. I schedule the travels around great food places.
Right. Who has the most butter?
cinnamon butter. Bro, is there brown sugar butter? I don't know. There's a place in Whitmore Lake, the Whitmore Lake Tavern.
Yep.
Right there off of, Whitmore Lake.
Yeah.
Dude, they got some really good cinnamon butter. I think or brown sugar butter.
Probably
No,
There's a honey.
No, it's either brown sugar or cinnamon.
Okay.
We'll have to bring them on and be a sponsor too.
Yeah.
But, well, cool, man. That sounds like you went to some good places. California. You said Wyoming too, right?
Yes, sir.
Nice.
Very nice.
Good. So how's we'll just tie in. How's the business going? What's what's been going on? I mean, obviously, I think the biggest thing in my forefront is just how everything costs like 10 times more than it did a year ago. Gas prices, everything, anything and everything is like doubled in price.
It really has, and that's the buzzword you hear going around now is it's transitory. So in just layman terms, that basically means it's not going to happen anymore. It's not going to keep going up like this. In inflation, this is a new adjusted level for inflation, and we're just going to stay here. But it doesn't appear so. And like you said, it's felt on the wall. It's felt directly on the consumer. And if you just do the simple math of 52 weeks ago, where average gas prices were to where they're at now, it's about 150% increase in gas and filling up the tank. So that is definitely alarming, and just proves the case for why you have to protect your purchasing power and invest more. And out in California, I filled up a tank of gas for $115 because it was about $6.15.
Are you kidding me?
And the Toyota Tacoma, it just eats gas. So now I'm paying 150% more for gas to travel, and then you're going to see that reflect into airline costs and everything, because it's going to cost more to transport these goods. And when fuel goes up and the cost of moving goods is up, then you got to have higher elevated prices to keep everybody in business.
Correct. I saw this. There was an article. I don't know if it was an article or just someone posted. I can't really remember. I saw it a couple weeks ago. But they talked about this, how one of the bigger conversations is how, raising the minimum wage to $15 an hour, right? Like, and a lot of places have done it. I mean, sure, we've seen pictures all throughout random places. Mm-hmm. There's a McDonald's up north that posted $20 an hour.
Right.
Right. Then that's a whole nother conversation, because it seems like nobody's working either. Like, places are asking for help all over the place. Restaurants are closing down because they can't get enough help. But what's happened is okay, well, now you have your $15 an hour rate, but guess what? Inflation has come along, and your cost of living has gone up too. So there is no gain. Like, you're still exactly right where you are, making $12 an hour. Because now your gas is more, your rent's more, your milk is more. So, at the end of the day, when you get that check after your taxes at $15 compared to maybe $12, but everything now costs more, there's no difference of life. It's still the same when it comes to just what's coming in and what's going out and what's left. And I just thought it was kind of the whole idea of that. You're getting more, but now everything costs more, so there's no gain for anybody at that right now. Mm-hmm. I just thought it was interesting.
Yeah, that's a really good point, Paul. And that's a dilemma everyone, including investors, are facing, because if you make, say, 10% on your investments in 1 year, in nominal dollars, like you said, it'll look good on paper. But if you really subtract, real dollars net of inflation, then you're actually didn't make that 10%. Right. You have to really consider what inflation is doing for investors and their returns, and it's hovering around 5% inflation. So if you make 10%, just quick math, you only really made 5%.
Right.
So that's why the demand for just investing knowledge and is only increasing, because in order to even protect our purchasing power, we have to invest, and we need asset prices to go higher. And yeah, you have gas going higher. That helps a lot of energy companies, and those stocks have done well this year. So yeah, I guess we had go into that a little bit of recap since where we were at in February. Just you have the energy index this year is up 55%. So that's like energy companies, think like BP, Exxon Mobil, Phillips 66. Those companies are doing very well because oil is so expensive, and it could go to $100 a barrel, they say. So that would mean basically all gas prices would be above $4 per gallon pretty easily.
They're saying
And that's
$100 a barrel by when?
2022 sometime.
Yeah.
Which is
That's
not
a lot
far
of analyst predictions there. So it's just, I mean, if you're investing in energy this year, you're doing well. But if you look back in the 5 years, energy oil sector is still down 15% in the 5 years. But this could be the time where as clean energy becomes more popular and you see more and more policies going around clean energy electric vehicles, that they could really price out the gas vehicle, which sounds absurd, but it would happen at this rate. If oil keeps going higher, then everyone's going to have to switch to electrical energy, and I'm fearful that could happen because I like my gas vehicle.
I was gonna say I
like
do too.
I ain't going electric.
Yeah,
I saw somebody not too long ago. They have those Tesla charging stations at like the Myers and stuff, and it was like 1:00. I went to Myers for something, and then I saw like 2 cars just sitting there in a empty parking lot charging their vehicle. And what does it take, like 45 minutes for like a speed charge or something? It's like, why would you want to sit there for 45 minutes in a parking lot to charge your vehicle?
Yeah, so it just goes into just the dynamics around policy that are directly affecting the stock market, because there's clean energy stocks and companies that are fighting for these policies, and they're going to profit from that. And I think we talked about Tesla before, and Tesla, year to date, the stock's up.
Growth recently, haven't they? I saw someone posting on Facebook. They're like, Tesla was up like $90 a couple days ago or something.
Yeah, when we were, it was about March. Yeah, they're up 42% the stock year to date, and they're all about clean energy. You have the batteries, you have the electric vehicle, and that's I think I talked about the top investment themes earlier this year, and it's just one of those themes that's hard to ignore as an investor, because the policies that the government is making is for these types of companies, and oil companies are gonna be shunned because they're, I guess, hurting the environment, and that's a debate for another day. But it's just like, where do investors, where can we make money in the long term? And that's regardless of our political stance, we have to protect that purchasing power and make money. So,
right, man.
And then we talked about Bitcoin last time too. And what it's done since then. So there's just been
well, I think
a lot of
it was the hot GameStop, all that was going on.
Robinhood,
freezing the trading and whatnot. But I was just looking, if we met, it was probably around February, March, right?
Yeah, somewhere.
Tesla was, we'll just say it, April. It was sitting at a 682 when we last talked. Somewhere right around there, give or take, probably a little. It's at 1,037 right now. We should have invested with Hooker in Tesla. We probably could have made a couple bucks. We just listened. So what I'm telling you, audience, listen to this man, what he's about to tell you, and give him a call. All right,
and it goes back to what you said, Paul, is, this podcast is about a community. And, to make good investment decisions, you have to have a community that understands what you're investing in, and then why you're investing in these types of companies. Because if you don't, then you could really damage your financial future. So for the average investor, they should probably just have 80-90% in passive index funds like the S&P 500. or Russell 2000. But for, that rest, 10, 20% of your portfolio, you can, if you feel comfortable, take some speculative risk and put it in, companies like Tesla. And you'll see a little bit more growth, ideally. So that's the attractive part of individual stock investing, that there's a lot more risk, but you could have potentially a lot more reward.
Now, back on the Bitcoin and the cryptocurrency, do you see potential improvements for it, especially with all the inflation that we're starting to see? As inflation goes up, maybe the appetite for crypto or Bitcoin will go up as well?
Yeah, that's a great point, Devin. And as you see, what Wall Street's really good at is they can make money out of anything. So what they did recently is officially commercialize the Bitcoin, and that's through BitO, the new Bitcoin ETF. Previously, there was a lot of unit investment trusts, which is a different structure, but with the exchange traded fund ETF, the Bitcoin price can be tracked and put into a individual retirement account or a 401k, depending on the fund options, or an individual account. So the individual investor can now gain easy exposure to the price of Bitcoin through an exchange traded fund, just like any other fund out there. So BitO is the ticker. I'm not endorsing it. It's more of just, hey, this is what you can invest in. Whereas previously, 4 or 5 months ago when we were talking, this didn't exist.
Right.
There wasn't an ETF to invest in Bitcoin. So back to your question, Devin, this is definitely going to be an innovative space. There's going to be a lot of ups and downs, but it's going to help investors diversify their portfolio, combat inflation with a cryptocurrency or commodity. Some people can label it. You can label it however you want, but it's definitely a new emerging asset class, and it's something that investors can't ignore. And then also we had the Coinbase IPO since we last talked. Coinbase, if you're not familiar, is one of the largest cryptocurrency exchanges. I mean, they spend so much money on social media advertising. It's hard to not see what they are and recognize their brand. So that's a company to watch for the future, just because they have so much exposure to these cryptocurrencies, and their brand recognition for consumers is pretty strong. So that's no. Is he in Bitcoin? I'm not sure.
Yeah,
but I think
he does his own
he was
commercials
talking
now
about
for it. Yeah, and then what did he just throw his 600th career touchdown pass to? I think it was Mike Evans.
That's right.
And then Mike Evans didn't realize it and gave the ball to the fan. And then they came back and asked the fan for the ball. And I heard it yesterday. I think they offered him, I think, a couple signed balls from Tom Brady and Evans, couple signed jerseys, like 2 years worth of tickets. And then Tom Brady gave him like $63,000 in Bitcoin. And the one that he's spokesperson for or whatever.
No way.
Yeah, no, I'm looking this up right now. And it says the Bucks quarterback asked cryptocurrency platform FTX to give a Bitcoin to the fan who returned that precious football. Wow. Yeah. That's this is mind blowing. Just since we've last talked, how much it's become mainstream, and I think it's just a big deal, because of inflation. Americans are recognizing that the government is mishandling our fiscal and monetary policies, and has to be some type of solution. And right now, that is through cryptocurrencies. And it's unfortunate that we can't provide another solution that's a little bit more clear, and it's not as technical, but that's just what's going on right now. And you see the meme type of coins like Dogecoin, and then now you have it's Shibu. I don't even know if I can pronounce Shiba. This coin Yeah, this coin is really popular on Twitter right now. It's a meme token, and I think it's gone up like 60 million percent, 60,000%. I can't even read these numbers. It's so much, but it's literally breaking the internet, and people are making it a shit ton of money off of it.
Jeez.
It's valued at nearly $30 billion right now. So that's in
it?
comparison.
Jeez.
Yeah, that's as big as most companies in the S&P almost.
I know. It's huge.
That's ridiculous. So I got a question for you in regards back to that the BITO, BITO, the EFT. So how does
ETF,
that work?
ETF.
ETF. So how does that work then? Like what is their? How does that flow? If you got Bitcoin, what is Bitcoin at right now? Like 58,000 or something?
Yeah,
and you
hovering
got
around there.
BITO at 38. So like how does that correlate for just like the average Joe? Like you kind of said, like, okay, you can get a piece of Bitcoin through is it ETF? Is that the right way of saying it?
Yes.
So how does that
So the
work?
ETF is so the ETF structure, just to go back a little bit, in the 90s, the ETF was a new investment structure to help investors avoid taxes through flow-throughs, because a mutual fund, if you have a cash account, you're going to see flow-throughs. That is a taxable event in a mutual fund. So the mutual fund is not as tax efficient of an investment vehicle. So that's why they created the ETF. And now the ETF is become a lot more popular than the mutual fund. So to your point, the ETF can basically own inside the fund Bitcoin futures, which is a derivative that they're basing the pricing of this BITO at. So it says it's at 37.54 right now. So that price is based on a net asset value of the derivatives, which is like a futures contract that they're buying on Bitcoin. So it's really complex for the average investor to understand. And that's why I'm still hesitant about these types of products, because the actual assets that are backing them. So if we go step back a little bit further, there's another unit investment trust called GBTC, and that is by a pretty popular crypto company, Grayscale. GBTC tracks the price of Bitcoin. It does try to an extent, but what happens in these funds is the disconnect between buying and selling. So that'll skew the results, the returns of the fund. So if, for example, Bitcoin this year has returned, I think over 100%. Let me just confirm that. Yeah, so year to date, Bitcoin is up 104%. So that's pretty good if you own the actual Bitcoin or portion of it. So you can own sats, as they're called, just a portion of the Bitcoin. But these investment funds that try to track Bitcoin, like GBTC, that's one of the most long-standing one, is only up 32% year to date, which is still good, but it's not tracking the actual price of Bitcoin, because the structure of the fund is not working as it should be, simply put. So if you have a Bitcoin investment fund like BITO that's trying to track the spot price of Bitcoin, eventually that's going to have some discrepancies, and you're not going to actually have the actual correlation 100% to Bitcoin. So that's a problem for investors, because you think you're getting BITO and you're going to track the price of Bitcoin, but then what if a year from now, 1 month, you have Bitcoin is up 15% and BITO is only up 5%. You're going to wonder, is it broken? And
Right.
That's just the understanding that Wall Street is going to commercialize whatever they can to make money, and they don't really care if the investor understands what's inside the investment fund, and to tell and explain to the average investor what actually is driving the price of BITO is the futures contracts. That
Just
that's going to take that's going to take a course in finance where no one has time. The average investor doesn't want to take the time to do that. And that's where it pays to hire somebody or have a community of investors to share that knowledge and information, so you don't make the mistake of putting all your money in BitO thinking that it's going to track the price of Bitcoin.
Right.
Well, I just think that was when you kind of first explained, I'm like, it just doesn't make any sense. Like, why would I even put money in that? Like, I don't know. Like, it just kind of, like you said, though, Wall Street's always going to find a way to commercialize anything to make money off of it. And it's like, to me, that just seems like, no, I'll pass. I'll just
So it goes. No, that's a great point, Paul. And I mean, I was upfront and honest that I'm still hesitant about it. And if clients, they just tell me I have to have that, then obviously I'm going to buy it for them because they're in full control. But as far as my recommendations going forward, for an investment account, for a retirement account, I would not recommend BitO. I would look more to the picks and shovels of the crypto economy. So that would be companies like Coinbase, PayPal, Square, companies that are going to make money off of crypto investors instead of relying directly on the crypto price. So there's ETFs like Block, BLOK, that you can track companies that are involved in the crypto economy. So that might be another kind of horizontal way to play the crypto industry, but without having to rely on the function of Bitcoin going up, because these companies are going to make money off of investors holding cryptocurrencies, trading cryptocurrencies, and it doesn't matter if it goes up or down. They're still going to be in business and provide other types of banking solutions. So it just goes back to the whole kind of big picture of, you have inflation, you have cryptocurrencies, and the government having some problems handling their debt and
their hands in too many cookie jars. That's the big
and the fiscal and monetary policy is very questionable. So it just goes into the big picture is that this is the financial services industry is changing dramatically, and what it looks like today versus 5 years, I'm not too sure, but it's going to look a lot different than it does right now. And the way we pay for things and the way that we buy houses, I think, might be different too. And that's I would love to hear what you have to say on that, Paul, and how that might change.
I mean, obviously, it's going to go to how the currency changes hands.
Yeah.
Right. I mean, I think that's always going to play the factor. I mean, you can't deny that you're starting to see more of a digitized currency coming, right? Where it's like, now everything's plastic and just wave it. Boop.
Yeah.
I mean, that wasn't even around probably, a year ago, 2 years ago? I don't know. I mean, I just got my very first one where I'm like, now I'm just waving. Yeah. like, how safe is this? Freaking A. Like, can someone just walk by me and go, tap, got your money, sucker. But shoot, is that how we're going to do it too? When you're like, hey, tap, congratulations, you just bought a house.
Right. Well, I mean, there was...
Touch of a button, bing.
I forgot how long ago it was, but you couldn't use cryptocurrency for assets to purchase a house. And now Fannie Mae and Freddie Mac are allowing you
to use it as an asset,
but it's got to be deposited in an account and it's got to be there for so long. And but before you couldn't even do that.
Yeah, I mean, changes.
If you showed somebody, or like we can use stocks and stuff for people to pull out for assets to purchase the house, and if there was something with crypto in it, you'd have to just erase it because you couldn't use it. Now it's changed a little bit. I mean, it's definitely slowly changing. But
I think the thing about real estate is you physically live in real estate, right? Like,
yeah.
The stock market has always been this, for me, this figment imagination of some numbers out in this world, right? That's kind of how it's always been. I mean, sure, you got stockbrokers in Wall Street, but it's just a bunch of numbers, right? I mean, telling you what something's worth. Where real estate it's a physical, tangible asset that you live in, So I think it's always been in our industry topic of conversation of like, oh, is it going to go all digital? You know, but it's like, okay, well then who's going to let you in the house, or how are you going to handle testing it, right? So it's like, I think with it being so physical of an item that it's not like Amazon where you can just ship it and send it anywhere.
Right.
You know, house stays there. It's built on foundation. So I think it's interesting though that when you say this, because it's a good question, Timothy, that it's like, how is that going to change? But I think there's an element of degree that I don't think you could ever 100% remove
People.
the human aspect of buying or selling real estate because of that matter, right?
Yeah, no,
I
absolutely agree, Paul.
It's there. You have to see it, right? Like, I think you're the most stupidest person in the world if you ever buy a house sight unseen, right? Like, so I don't think it would ever get to that. But again, don't say never.
Right? Carvana, you just vending machine. Boop.
See, I think that idea. I'm not like in the auto, area at all. But like to me, it seems like that's just faded away. Carvana. I don't know if they're still succeeding. I don't know if their financials are still doing great. But it's like, I don't know.
They just built that one in Novi.
Yeah, right off of 96,
Yeah.
a huge little vending machine. It's like, go buy a car.
I don't know.
I don't know. To me, it's just me, though. I might be completely wrong because I'm completely out of the loop
Right.
about it. But to me, it's just like, I don't know. I think sometimes, too, there's that human element of wanting to just go see it and test drive it. Like Carvana is like, I don't know. It's like just delivered to your door. Yeah, that's sweet. Like, but I'm never just going to want a car delivered to me. And then you take a test drive, like, nope, don't want it. Tow it away.
Right.
I don't know. Maybe it's just me.
No, I think that I totally agree, Paul. And that's it goes kind of in line with what a couple years ago, when I was starting the advisory business, the robo-advisor, which is basically you can go on a website, create a risk tolerance profile and deposit money, and then a robot will manage your money. And with a small amount of a dollar amount, that might work for a while, but like you said, there's needs to be that human element, that kind of circuit breaker for your emotions. And like I said before in our last podcast, buying a house is the biggest investment for most people in their life, and buying and making that transaction is you can't do that alone without an expert. And to have someone work with your mortgage and work with your purchasing the property, you have to have someone to do that. And it goes back to really investing. There's a lot of emotions in the price action, and it'll drive people crazy to watch the price every day. And that's really what's happening. It's kind of like you're putting up a webcam in the forest to watch, see if the trees are growing, and that's. That's just not a healthy thing to do all day. So that's why you got to rely on those experts, and I think that's it leads into my other thought here is that Bitcoin isn't going to automate and create a robotic monetary system, but it's going to help more peer-to-peer payments, and we're going to have more power over our money with cryptocurrencies and less reliance on banks and these large corporations to control and hold our money. So that's where cryptocurrency can be that solution, and hopefully it's easier for people to understand. There's more education in the future, but right now it's still a little bit of the wild west, and regulators haven't really found out what to do with it yet because they're making money off of it. And Wall Street is making money off of it, so they're not going to cut off that gravy train quite yet.
Right.
I don't know. Like, and this just might be my opinion, but you almost kind of feel like it's probably pissing off a ton of, people that are within the power of who do control the powers that be of our financial system. Because it's like crypto is completely new, and it kind of is, at least for me, prove me if I'm wrong, but it kind of almost feels like crypto is putting the power into the people to control money, and not these big, huge corporations or governments that have been in control of it forever. And it's, like a way, like you said, to hey, like this financial system's a joke. We're gonna now create our own currency, and I think that was the first. I think when Bitcoin first really even kind of became you kind of started to like even news media channels were like, oh, what is this gonna do to the financial system? And it's like, well, you should be scared. Like that's if you're getting scared, to me says, okay, you know there's a problem, but it's only benefited your pocket this long. And now you're scared because it's not going to benefit your pocket any longer. And it's going to pocket everybody else. I don't know. That's kind of just what it seems like. It has become and what it's becoming. And that's why I think you got so many governments, so many corporations trying to like, well, we're not going to accept that. No. And it's like, okay, well, we're just going to continue to grow. Good luck. We'll see.
Yeah, no, that's a great synopsis summary of it, Paul, and that it goes back to Jamie Dimon, the CEO of J.P. Morgan Chase, is said since 2014. On January 23rd, 2014, I'm looking at this Dimon's many takes on Bitcoin. He said that Bitcoin is a terrible store of value. A couple of years later, he says Bitcoin is going nowhere, and it's proved him wrong every time. And like you said, he's got his own agenda to keep J.P. Morgan Chase and the dollar, the number one currency in the world. So it's just the longer they fight it, the stronger the case is for these cryptocurrencies. And what's even evolved in my industry is I can open a crypto account for a client now, and 6-7 months ago I couldn't do that. So the regulations will catch up to that, and they always will, how it can be managed and how it's disclosed. But right now, as I sit here, I can open a cryptocurrency for a client at Fidelity Digital Assets and manage that portfolio for a client. And Fidelity found out a way to provide that solution to advisors like me. So if any of your guests they don't have crypto and they want to know, or they want to start an account, then that's, I can do that now. Whereas last podcast, I couldn't do that.
Let's talk about that. Cause I think we may have touched base a little bit on it. I think we did, but I did a class back in, I remember because I only remember this because I was sitting in front of my fireplace doing this webinar with my Christmas tree. I just remember it. So anyways, I know it was back in December of 2020. And it was this whole webinar on crypto and like how you need to safely buy crypto. Like, what's the big trading app you just said? That
Coinbase.
Froze. What's that?
Oh, Robinhood.
Coinbase?
Robinhood. Right?
Robinhood, yeah.
You could buy it on there, but you actually never even really owned it because they didn't have the rights to buy it or something like that, right? So, and back to the main question though, because there was what they taught was you had to have a wallet, you had to have an account here, and then you because your wallet secured your crypto, if I'm remembering it correctly, and then you should only be buying it from. I don't know, you probably, obviously, I'm sure you do know, like, I think it's crypto.com or something. Like, there were certain sites that was legit where everybody else said, yeah, come buy crypto, but you actually didn't even have the ownership rights of the crypto because they were just, I don't know what the real terminology is, but like Robinhood, though, like, you actually didn't even own the crypto if you bought it through them. So, like, has that changed? As well,
that's
like
crypto.
You don't really need a wallet still, or Fidelity just has got it all figured out, and here you go. This is real crypto.
So that crypto 101, just hot wallet versus a cold wallet. The hot wallet's basically connected to the internet, and it's vulnerable to online attacks. Versus a cold wallet is offline, and you're actually owning your own keys, as they say it. So it gets really technical because it's all based on the blockchain. But at the end of the day, you want to be
talk about what blockchain is.
Yeah,
it's crazy.
And at the end of the day, you just want to be with a good custodian that is respectable and has the right security in place to protect your cryptocurrency, and that's why Bitcoin's not at $1 million a coin or $400,000 a coin, because there's so many different hurdles it has to get through and obstacles. So that's the what's holding it back. And I think the more regulation could actually be good for it, to help protect investors, because that's what it's all about. You want to protect investors and make sure that their hard-earned money is going into a legitimate custodian. And even Coinbase, I mean, they've had some individuals where they weren't able to get into their account, and they somehow lost their password, and someone else got their password, and then they transferred out their cryptocurrency. So it is vulnerable to getting your account hacked and sent, and it's a lot more vulnerable than say a regular bank account. So that's really why it's still the wild, wild west. But I think it's a piece of a portfolio. Everyone should have some exposure to it. If you have to allocate $100,000, maybe 5,000-6,000 to cryptocurrency index would be a healthy allocation.
And so now you now with hookup with Fidelity can make that happen as well.
That's right. And it's good for clients to get introduced to it and understand cryptocurrency. They don't have to put in their life savings into one coin, but it's something that I am advocating for investors to learn about and get familiar with. But obviously, the stock market is still the only game in town for most older investors, and there's still a lot of opportunities there, because you have the S&P 500 up year to date 23%. And like I said, if you don't want to invest directly into the cryptocurrencies, you can benefit from the companies that are making money off of cryptocurrency, and that's the BLOK ETF. And so there's a lot of ways to make money off of cryptocurrencies rather than just owning them, and that's, I think, more suitable for older investors, is to invest that way.
I mean, you were talking about PayPal and all that in our first episode with you, about how you thought those were good ones.
Because they were trying to be more versatile with Bitcoin, right?
Yeah.
PayPal's had a pretty volatile year. They're at 234 right now. You can actually buy cryptocurrencies on Venmo. I don't know if you guys use Venmo, but that's
really
something they launched, and you can buy Bitcoin right on Venmo.
I did not know that. I do not use Venmo.
I got a Venmo app.
I don't use most things. Use my phone for calling.
That's the most powerful thing you can use it for.
Of my phone. Anything surfing or anything like that, I don't know. I'm more of a computer person, I guess.
Love it.
I'm going to be getting the jitterbug next, just so I can, just phone calls.
Jitterbug.
Simplify. Keep it simple, stupid.
I don't need all this stuff. But, yeah. You got anything else, Paul?
Oh man,
got the expert here?
My head's spinning right now. It's just good stuff. I don't know where to even ask. It's just so what is your opinion? I don't know how much you can disclose or say or what. This is just your opinion. You're not endorsing anything, but what is your opinion? What is the market gonna look like in a year to the next 5 years? If you can even put a guess on it.
For the sake of my profession, it's going to be high.
I like
Bye.
Yeah, I like it.
You better go buy some stocks right now. That's a great point. So if we just go back 5 years and look at where the S&P 500 was 5 years ago, it was at 2,126. Today it's at 4,555. That's 114% return. Nominal returns. You're looking at least 18% on average after fees and everything per year. And there's to March 2020, that was a bear market. It only lasted for about a month, but technically speaking, it was a bear market, and most of Wall Street would argue that we're in a new bull market. So, like I said before, it's the only game in town, and I think that's what's going to keep driving prices higher. I don't think we'll see as a static, euphoric years like this year. We're up 23%, but I would say moving forward to expect about 5 to 7% per year in the S&P 500 returns. And obviously, like I said before, if you have a little bit more of a risk appetite, that's where you find the individual stocks where you could really separate yourself from the pack and build some serious wealth if you can find some stocks like that. And as we were talking about Carvana before, I was looking that up, and 5 years ago it was at $11, or in 2017 the stock was launched. It was at $11, and now it's at $292. So if you would have bought in at Carvana when it first launched, you'd be up 2,536%. But who knew about Carvana, and who's going to buy a car from a vending machine back in 2017? So it's all about getting on trends early and taking a small position that might grow into something extraordinary. So that's why you got to balance that risk and reward, and never bet the barn on something that you don't understand. And that's where it comes in to work with a human that can manage your emotions.
Right, I was gonna just say that right now. Carvana. We just talked about it. I won't be buying a car from a vending machine, but if you had an expert like you, knowing that this is gonna be a trend with everything going, you would probably, or an expert that knows about it would say, you're gonna want to invest in this. I know you don't care for buying a car from a vending machine, but most of the world does.
I was looking. Carvana dipped, when March of 2020, when everything crashed.
Yes.
Right?
Yes, sir.
Down to $28. If you would have bought 100 shares of Carvana at $28 in March of 2020, you would be sitting at $817,000 right now. No, I did that wrong. I'm sorry. 295 times 100. 29,000. So you would have been profited 26 grand of buying 100 shares at $2,800. Invested $2,800 in Carvana in 2020, March 2020, when it dipped all the way to $28, and now sits at 292. Right?
Yeah, and that's
That's not a bad return number, and only about a year and a half.
Yeah,
that percentage is just insane.
And that goes into just the behavior of an investor and the holding period. Because who would, if you made 10,000 on the trade, right? You're gonna be like, all right, I'm gonna sell.
Yeah.
But then you leave another 10 grand out there, and you're kicking yourself. So that's where that behavior management of an investor and understanding the trades and the information that we have now is the information we have now, and that information is going to change. So having just that discipline to hold through those kind of volatile periods, know why you own what you own, and make sure that you're not overexposed to a certain position. Because if you overexpose your portfolio to a certain stock and it goes down, you could sell it at the absolute worst time and it could rebound right in your face. And that's where there's a lot of hindsight and biases that can get in the way of investors. And my job is just to help minimize that and help people invest with peace of mind. And some of my clients, they don't want anything to do with those kind of stocks. They just want to invest in index funds and ETFs and have a more of a vanilla portfolio, whereas I have other investors who are, have a really serious risk appetite for those kind of companies and trades, you could say. So that's, where it comes into play, that I don't think a robo advisor or robot's going to take my job, because like doing mortgages in homes, you have to have that human touch to understand what's happening in the market and understand the asset that you're buying.
Yeah, I think it goes. I mean, this has probably been talked about for the last 100 years, right? As technology, as industrial, our country has grown, right, around the world. Not even just our country, like we're some special people. I mean, we might be, but it's stupid to think that. I think the thing is always like, ooh, is that going to take away jobs? Ooh, is that going to go to a robot? Ooh, is that just going to go to a computer? Keep in mind, it takes people to invent those things, and it takes people to run those things. It takes people to do what we do every single day. So just to think that the human element's ever going to be completely removed, I just don't ever see it happening. It might be to an extent, but humans still have to be here for anything to work, right? Or to
have
operate.
to be a Terminator situation.
Correct.
Yeah.
So, like
Skynet.
I think when I ever hear like, oh, or everyone's gonna lose their job, I'm like, dude, you're just stupid. Like, shut up. No, it's not gonna happen, because if you don't do something, that won't do anything either. Like, if I don't push the button to turn my computer on, it'll never turn on. It doesn't. It doesn't know to be like, oh, it's 9:00, time to work, Paul.
Right.
Like. No, I don't know. It's just, yeah. I think the human, just in that aspect of what we're talking about, I think the human will never go away, obviously.
Right.
We're here. We're talking. We're living. It's us. And I think there are certain things, as we've seen in the last decade, 2 decades, that, buying things can just be done online. But things that, like, hunting, or going fishing, or going outside and riding a bike, or kayaking and playing golf or tennis. Like, that obviously takes human beings to do.
Right.
So, like, there's things that'll just never go away. They might look different, but it's still there. But, man, I had a good question, too, when you were talking. I'm like, ooh, I got to ask Timothy that one. I'm went on the whole human aspect, and I lost my train of thought.
Sidetrack?
Oh, I got it. So, with Tesla becoming so big, I'm curious, because I tend to lean more on the riskier side. My wife is more of the conservative side when it comes to our investments. So I want to ask you on the more risky side. Are there, that don't originate in China, other electrical companies that are, like, on the verge of becoming... I don't know, not in the sense of, I think very vague when it comes to the electrical, because obviously you see, like you mentioned earlier, it is something that I don't think it's not going anywhere. It's becoming big. We got stupid government trying to implement it into everything, which I think is stupid, because gasoline is great. And so I think my question is there any sleeper companies on the radar of, like, hey, they're doing good things, they're not in China, and they're in the electrical area that you may have your eye on? And I'm just curious if you got your eyes on a few companies in that sector.
Yeah, I mean, there's an ETF. So the way I filter some of these investments is I'll look at the top funds. The top fund managers will select what they think are the best companies for these clean energy portfolios or electric EV style investments. And if you look through, some of these ETFs, you can find some of those companies. And some that come to mind is like Plug. It's called Plug Power. They're trading at 34 right now, and they're developing hydrogen fuel systems, and they have a lot of clean energy style investments that they're trying to push. And that's how I find them is in these ETFs, and Plug Power is one of them. Then you have, Ford is their stock has done well, but is Ford and GM an electric car company now? And that's what they're saying they're switching to, going all electric. So there still could be some upside there. Ford Motor Company year to date is up 82%.
Nice.
Did I buy enough of it? No, but but to look at where they were trading in 1999, Ford was at $34 a share, and now it's at $15. So some of those kind kind of sleeper picks could be the ones that are right in front of our face.
Is
Not
their
to say,
ticker symbol just F?
yeah, not to say you should just go out and buy Ford, but that could be, the play right in front of our face that is a local, Detroit company, right? And if it goes back to 34, where it was at 1999, that would be 120% gain. So,
Right.
Just even
and
worse.
it's becoming, sometimes investing is that simple. You don't have to kind of look for the Carvanas or those hot picks and look at a company that if they do have good management, their balance sheets are strong, it could be Ford. But like I said before, if you do have a little bit more of a risk appetite, what I do is, my investment process is go through these types of ETFs that have exposure to these kind of innovative companies. And another good company or investment management company to look through is ARK Investments. They provide a lot of data on innovation, and they this year they launched a space investment fund. So I mean, we're going from crypto to now I could talk about space, but how many people are booking a space trip in the space hotel? So it's like when does investing just get ridiculous and all the
Don't even
hype
get me
around
started
everything,
on
like
NASA. I think it's the worst government spending of money ever. That's just my opinion.
So that's where it could go into the play that space exploration is more privatized, and it could be a profitable industry in a couple years. But really is the difference of understanding hype versus an actual investment. And I think for your listeners, just to put on your business person hat and think like a real business owner. Is this business making money? Do they have cash flow? Do they have a strong consumer desire? Do they have a good reputation? And companies like that are Apple. Apple is they have a ton of cash on the balance sheet. They're trading at $148. They're up 33% in the past year. And is this a $225 stock in a couple of years? Some people think so. So some of those
I'm shocked they're that low.
Yeah.
To be honest, what has been their
yeah,
all-time high?
they had that stock split, so that's kind of why it distorts
did
the
they?
price. Yeah, so they give
Was it
it's kind of
2 for
like
1,
a
or
psychological.
what'd they do? 4 for
I think
1?
it was the Apple stock split. I think it was 5 for 1.
Johnny's in here.
But
that's crazy.
Yeah, 4 for 1 on August 28th, 2020. And then, that's not the first time they split. They had a 7 for 1 split back in 2014. So that just gives the investor like a little bit more psychological, like, hey, it's cheap. I could get it. And it's just kind of, for the average investor that's not watching the market every day, it's like, well, this looks like it could go to 200. And, if Apple goes from where it's at today to, let's just say 200 or 225, Wedbush has a price target at 225, that would be 52% gain. So it goes back to that, conversation we had in the first podcast, is you can really shop around for some interesting speculative stock picks and cryptocurrencies, or you could just, invest in some strong companies and balance those companies between your portfolio and own those for a long time, rather than trying to jump trains and get on a new bandwagon and trade the Dogecoin and the Shibu coin all the time. And that's really where I try to help investors is balance that, and they can understand that we're investing for the long term, so we should probably not change trends and strategies all the time, and stay invested in things we know. And companies like Apple and Amazon and Facebook are, I don't think, going to be going anywhere for the next 5 years. So I'm pretty comfortable holding a majority stake in those types of companies.
Shibu. It sounds like a sheep.
Yeah, no, look that up. Look that up, Paul, when we get done here. You'll just be amazed. You'll be like, well, why didn't I buy? Why didn't I put it? You did? Oh my god!
0.000000078. Like, what the? It's not even. It's a fraction of 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 a penny, but it's just skyrocketed a zillion. I mean, there's just this massive green jump.
Yeah.
So
Just
yeah,
a
like
clip.
you said, like there's people out there making a crap ton of money, just even that. But that's the crazy thing. Like we talk about Ford being at $15 a share, and you got Shibu over in who knows what world, just in the cloud, somewhere in the space, making people just tons of money,
Yep.
trading at fractions of pennies. It's crazy. It's not normal. But my response when you were talking, I'm like, well, that just sounds boring. Like, I don't want to just put my money in Ford car company.
Right. It does.
50%.
It does. It's
like,
so boring.
Yeah, it's conservative and it
so
sounds
boring.
smart, but like boring. Like, who wants to take calculated risks? Come on.
Yeah.
I want risks to where everyone says you're stupid. I'm like, exactly why I'm doing it.
That's a great idea.
Yeah. Like, that's the thing. Like, I want to be doing what nobody else is doing.
You?
Yeah. No. Yeah. Because then at the end, I want to be like, told you so, sucker. You see my Lambo? Shibu is the license plate, sucker.
That would be awesome.
And I'll have you call Timothy Hooker at Dynamic Wealth Solutions, who made it happen.
Yep.
So, because he's
Yeah,
driving
that's,
three of them right now.
Yeah.
He's got one for every day, different colors. He owns a couple Lifetime Fitnesses, too, by the way. He'll give you the black card.
One in space.
Partnered with Elon Musk.
Yep.
Put one in Mars. Hey, buddy, we have to have a Lifetime in order for me to come there. I made it happen.
Go. There's no Lifetime. I'm not there.
Yeah.
No Lifetime in your city.
You would even if I gave you a free ticket? Nope. Oh man. No, that's crazy stuff though. I think it's fun though. It's fun, it's frustrating, it's mind blowing, confusing.
Rewarding.
Yeah, it's all everything in one bottle.
Yep.
What a beautiful picture to get in the stock market.
It's like
Go,
a glass case of emotion.
But isn't that what always the Wall Street is? I mean, let's be real. Like, it's no different. It's always like that crapshoot. Like, well, invest. Good luck. I'm kidding. No, you're like, no, dude, that's
right.
what they call me. Shut up, Paul.
But that it goes into just that cultural phenomenon that is happening because you can gamble on your phone anywhere. You can literally sit on your phone and gamble with a live roulette table. Barstool Sports has their app, and then you have DraftKings, and it's just creating a more gambling style of culture since we can do it from our phones, and it's got its trade-offs. It's easier and convenient, but one thing it is doing is it's creating a whole new industry, and like we had back in our first conversation about Robinhood, and they went public as a stock, and it's good and bad, but it just goes back to it's helping my industry, and it's bringing a lot more attention to investing, and with more information out there, that it reinforces the case for working with an advisor because there's so much information. What's right, what's wrong, what's clickbait, and a lot of articles, doom and gloom articles. So that's where I really love what I do because I get to help people filter out information and misinformation and invest accordingly.
I love it.
Yeah. No, man, appreciate you taking the time. I mean, obviously it's way beyond my head.
Yeah, and like I said before, I'm so proud of you guys. You guys are you're really inspiring that you're still kicking it. Paul, the Seguin and Car Show, and
Let's see what Timothy was episode 2.
I think it was 2.
Was it 2? And now we're on 36. So we'll call you on episode 66, right? That's every 34 shows.
Yep.
We'll have
Market
you on.
update.
Perfect. Yeah, and I'm so excited. I hope your listeners got a lot of value from this, and if you piece together both of our updates. There's just been so many changes in the investment landscape, and it's really rewarding to talk about it with y'all, and I've really valued this time too.
Well, I know you've said twice congrats to us, but I think you also need some congrats too. I mean, obviously, like in any industry, no business will survive without clients. So obviously, your success level is that's why I know we love having you on. I think it's cool to talk with, because I don't know, is in your industry, are they the average financial advisor, if that's what you want to say, like, are they more older than like real estate? The average realtor age is like 53 still. The average.
No, yeah, that's exactly right. No, it's about 57 is the average age of a financial advisor.
See, in like my opinion, like with everything going on, I want to be dealing with someone like Timothy that is younger, that understands how this stuff works, right? Because I can only imagine I don't know, I'm just guessing, but someone in their 50s with all this crypto crap is probably like, I don't even freaking care. I'm sticking with my mutual funds and my blah, 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 and they've done well for me, so no. I mean, it's probably not the case, but I could just imagine that, right? Like, I mean, I don't know. I mean, I don't know how you see it too, like on the mortgage side, but I mean, I still deal with some really old realtors, and they still do it the old school way, and this is stupid, all this electronic shining, and, it's like, well, this is 2021.
Right.
Get on the bandwagon, sucker.
Yeah, no, and I think that's, what, to your point, is that you're building your business for millennials and younger individuals so you can grow with them, and you have to have those types of technologies in place to satisfy the convenience and the things that they demand. So I'm not building my business for a 60, 70-year-old investor. I'm building my business for say the 40 and under investor, and that's where you have to go to, as we said before, is go to where the puck's going, and you'll do better.
And put it in the net.
Right.
That's right.
And do it with Timothy Hooker, Dynamic Wealth Solutions.
Absolutely.
So do it one more time. How can anyone listening get a hold of you if they want to talk with you or have some questions or want to sign up and invest with you?
No, yeah, I appreciate that plug. It's mrtimothyhooker.com. You can go to schedule an appointment. I'm pretty active on Twitter too, TW Hooker. And I just share ideas and information there, and surprisingly, got some clients from there because they're just interested in the information that I share, and I think that's a big part of marketing these days is you have to put yourself out there and add value up front, and I try to do that with my clients and prospects to show them I care, because each individual has a unique situation, and I build client portfolios based on their needs and lifestyle, and everything's personal. So everyone can schedule an appointment there, but once the service is rendered and the solutions are built, they're always unique and catered to the client, and it's not some kind of cookie cutter approach.
Right. Mm-hmm. Well, I mean, that's what just to, as we're wrapping it up, I think it takes it back to the first time we had you on the show. We talked about, I mean, that's just so much also how we operate our businesses. I just smacked your mic. It's relationships, right? Like, I remember when you said on the first show is that you and your partners were working for a larger firm, and everything was push these products because that's how they made their most money, right? Where it's very common even in our industry where it's just salesy. Mm-hmm. And numbers. We got to sell 500 homes this year. So team, go, go, go.
Right.
Just get them sold, get them listed, and then push them along because we're focused on getting those other sales, right? It's not personal. It's not relationship. It's not tailoring to that client's need. Because the one thing that sparked me to say this is what you just said, is there's not one client the same. I don't care if they may have a mix of some certain investments. Yeah. But their needs are all different. Their end goal is all different. Whether it's I want this in 5 years or 10 years or 20 years or 30 years. And so I think that's the point and thing that we like to talk about on this show when we do talk about business other than like outdoor stuff. It's it's educating our clients so that they can obviously feel comfortable
Right.
In buying a house, or the same thing for you, feeling comfortable of knowing what's their best investment opportunities for what they're looking for, not just pushing you on a product because, hey, they're giving out a 10% bonus this month. Yeah, we're going to make you buy that, right? So I think that's the right way of doing business, and I think that's why we, just from the beginning, obviously love partnering with other people in other industries like yourself that do the same, right? Because that's taking care of a client the right way.
Yeah.
So congrats to you as well, because I know you've tried to make it sound like we've made it on this show, which
I have. I didn't think I'd make it this long.
But no, we're proud to have you on again. It's awesome. Thank you for taking the time out of your day that is, I'm sure, busy, and getting back to your lifetime workouts. But
I gotta hit the sauna now, boys. I'm gonna go hit the sauna.
No, but
sauna and shower.
For sure.
Yeah.
I need to get on the bandwagon of getting with you, man, and getting some good moves going, because it's always for the taking, right? If you're not doing anything, you're losing.
That's right.
That's true.
So
Don't want to be moving backwards.
Right.
No. But awesome. Well, thanks again, man. Appreciate it. It was another great show with the Mr. Timothy Hooker.
Thank you so much, Tim. Appreciate it.
Thank you, gentlemen.
All right, guys. Well, I'm Paul Seguin with eXp Realty.
I'm Devin Carr with Gold Star Mortgage.
This is the Carr and Seguin Show.
See ya.
See you.
The primary purpose of this podcast series is to inform, entertain, and educate. The information, opinions, and recommendations presented in this podcast series do not constitute legal or professional advice, opinions, or endorsements of any kind. Gold Star Mortgage Financial Group, NMLS 3446, Equal Housing Lender.